As discussed earlier in an email to you, when DUG was trading above $100 thereabouts, I was talking about the idea that one might want to take some partial or full profits, because ever since the stock jumped up for us here above 76, it's been trading well. Nice move over the last couple of weeks, and of course we know that that was because it gave us the ultimate more the buy signal when it broke out on its RSI on the monthly, moving above 61.8. Also, we can see that the MACDs moved to fresh 3-year highs, and that's why we've been playing this. Take a look at the weekly, and we can see that the weekly is having a nice week right now because it's moving above 69.1. So if we take a look at the daily, we see that the RSI has been holding well, trading above 69.1 today, breaking out again. But I think here on the hourly is where we see a little bit of a problem, and that's why I was saying take some profits because of this improvement in price highs, but we are seeing a decline on the RSI highs. That negative divergence could be a problem, but what I can do here is go to the 5-minute chart and we can draw a line, and this is where we can determine if to take more profits. If this line is broken, and this is a 5-minute chart, RSI period of 21, if the stock or the ETF goes on to break this line, then one can consider taking some more profits. Otherwise, if it's bouncing on the line here, we can continue holding. A break of that line would suggest that there's much lower prices, mainly because of that negative divergence on the hourly. So let's not just look at this and not do anything about this. We have to respect that. And I also mentioned other charts that have been doing well. For example, FXP seems to have a clearly defined negative divergence. We've been making improving highs over the last couple of days, but the RSI on the hourly is showing a decline there. If you take a look at the 30-minute chart, you can also see this being shown. On the 30-minute chart, we are making lower lows on the RSI as we've been making higher highs over the last week or so. So all those things put together, we go back to that 5-minute chart, and I think this is where we can actually use this to determine what to do in the short term. Here we are seeing, because of an elevated market, very volatile, we can default to smaller time frames. This is the line here. Anything below this line on a 5-minute chart, RSI of 21, and this thing could actually start pulling back. So you can consider taking more partial profits, or if you like the gain right now, consider booking full profits. Eric Mwadid, Mwadid.com as always. I'll keep you posted. Good luck, peace, and blessings. EACS.